Welcome to The Explainer, where we break down the complex forces shaping our world. Today we're diving into how a new era of geopolitical tension is basically redrawing the map for global trade, for commodities, and for your investment strategy.
Okay, let's just jump right in. Have a look at this. This is one of the most critical and honestly most vulnerable points on the entire planet, the Strait of Hormuz. At its narrowest, it's only about 33 kilometers wide, but its strategic importance is, well, it's immense. It's the textbook example of what we call a geopolitical choke point.
Now, just let this number sink in for a second. 31%. That's the percentage of all seaborne crude oil that has to squeeze through this one single choke point every single day.
And look, this is not some kind of theoretical risk. We saw this become a stark reality not too long ago when Iran's Islamic Revolutionary Guard Corps just announced they were closing the strait. They threatened any ship that even tried to pass. That one move showed everybody just how fragile our global supply chains really are.
So how do we get from a conflict in some narrow strait all the way to a broader investment thesis? Well, here's our roadmap for today. We're going to explore the new rules of global conflict, pinpoint the key battlegrounds, both the old ones and the new ones, and then uncover how to actually invest in the physical infrastructure of this changing world, before tying it all together with a timeless principle of safety.
Right, so that incident in the Strait of Hormuz, it's not an isolated event. Not at all. It's really just a symptom of a much larger global shift in how power is used and how it's challenged. The old rules, they're being completely rewritten as we speak.
When you look at this sequence of events, a really clear pattern just jumps out. Military action is now met almost immediately with incredibly powerful economic responses. The financial system itself, it's become a front line. Kicking Russia out of SWIFT, which is basically the secure messaging system for international banking, that effectively cut the country off from huge parts of the global economy, practically overnight.
This strategy has a name. It's been called the weaponization of the dollar. And it's a powerful tool for sure, but it's also forcing other countries to actively search for alternatives. Even the International Monetary Fund has pointed out that these kinds of moves could lead to other currencies and systems being adopted just to get around the dollar.
And that brings us to the most notable group of nations pushing back, the BRICS. You've got countries like China and Brazil already making deals to settle trades in their own currencies. And the whole group is exploring a brand new common currency. Think about it. If they add a major oil producer like Saudi Arabia, that would just pour gasoline on this whole trend of building a parallel economic system.
So this new global competition, it's really being fought in two main arenas that are deeply connected. You've got control over physical routes, or choke points, and you've got control over essential resources, or commodities. But we need to start looking beyond the obvious ones. Now, this slide is where it gets really interesting, because it frames this new reality so well. While Hormuz represents that classic, old-school kinetic threat, the real long-term game is economic coercion. It's quieter, but it's potentially so much more powerful. And as these old routes become contested, completely new ones gain immense strategic value. The next trillion-dollar trade, it turns out, might not be in Silicon Valley. It might just be in the melting ice of the Arctic.
And this just brilliantly illustrates why controlling these routes is so critical. A closure at Hormuz doesn't just hit oil. It cuts off the flow of liquefied natural gas that heats homes across the world. And it stops about a third of the world's urea, a critical fertilizer for global food production. The downstream effects are just massive. And the consequences are immediate. When the strait was threatened, we saw natural gas futures in Europe jump over 60%. The price of urea shot up 25%. So when one little waterway is at risk, the prices for your fuel, for your heating, and even for your food are all directly impacted. This is literally the blueprint for disruption.
So let's shift to that second arena, the source of these critical materials. While choke points control the flow, nations are now competing fiercely to control the origin. And right now, China has a near monopoly on refining many of these critical minerals. They produce 98% of the world's gallium and 60% of its germanium. For the West, that kind of concentration of power is, it's untenable.
So here's the crucial point. This isn't about some obscure materials nobody's heard of. We're talking about the fundamental building blocks of modern civilization. And this dependency has kicked off a new great game, a global scramble for new sources. And the focus is now shifting to one of the last great frontiers on Earth, Greenland and the broader Arctic, which holds these huge untapped reserves of these exact same rare earth elements. For an investor, this shift from the desert to the Middle East to the ice sheets of the Arctic isn't just some geopolitical curiosity. No, this is where the non-obvious opportunities are starting to pop up. We're talking about a multi-decade build-out of an entire new economic corridor, what some are calling the Arctic Silk Road.
This classic piece of investment wisdom is more relevant today than ever. But instead of just roads and docks, we're now talking about ice-hardened ports, satellite communication networks for polar navigation, and specialized ships that are capable of traveling the new Northern Sea route. You know, that's the route that can cut shipping times from Asia to Europe by up to 40% compared to going through the Suez Canal.
So how do you actually invest in this? It's about looking at the enablers. You can get broad exposure through ETFs, sure, but the real alpha is in the specifics. Think about the huge marine shippers like Maersk, who are already pivoting to test these northern routes. Think about the defense contractors who are going to be securing these passages as part of NATO's 2026 Arctic posture. But, and this is a big but, a word of caution. Avoid the hype around those illiquid penny stock miners. The brutal truth is that's where retail investors often get trapped. The smarter play is on the institutional-grade infrastructure that makes it all possible.
And don't forget about the demand side of this equation. The AI boom isn't just happening in the cloud, it's happening in these vast, power-hungry data centers. This entire revolution is built on semiconductors and advanced electronics, all of which require a stable, secure supply of those exact same rare earth minerals we were just talking about. The need to power AI is directly fueling the urgency to open up the Arctic.
Okay, so given these huge opportunities, but also the massive risks of a new Cold War in the Arctic, how should we adjust our mindset? The answer doesn't lie in a spreadsheet. It actually comes from a pretty simple principle from engineering.
Think of it like this. If you're an engineer and you're told to build a bridge that has to support 40-ton trucks, you don't design it to hold exactly 40 tons. No way. You build it to support 60. That extra buffer, that's your margin of safety. When you're investing in a new geopolitical frontier, like the Arctic, your margin of safety isn't just about the company's balance sheet anymore. It's about accounting for all the unpredictable political risks, climate challenges, and tech hurdles. Because in this new world, the unpredictable isn't just possible, it's guaranteed.
And that leaves us with one final thought. As you look at your own portfolio, just ask yourself, are you building a bridge for the world as it was, or for the world that is emerging? Are you prepared for the shocks and opportunities of a global economy that is fracturing and reforming right before our eyes? Because the great game, it has already begun.